I don't hear anything now.
Okay, great. Well, hopefully,
Yeah.
this is it. Well, trial and error, you know? So
Yep.
the great thing is it's being recorded. So we can definitely upload it later if it's not effective right now.
Okay.
Same time, I want to say hello and thanks for joining. And anyone else out there who is on the recording, I want to once again thank you. And oh, cute shirt there. Let's see your shirt.
Thank you.
Your favorite realtors. Oh, I love. Yes, yes.
Thank you.
So let me begin by just introducing myself. I am Bahia Shabazz. I am the executive director and founder of Brown Girls Do Invest. Um, Brown Girls Do Invest is a nonprofit organization. We were established in February of 2016. In October 2016, we became 501(c)(3). What we do is we educate everyone from 12 years young all the way up to 112 years young how to invest in the stock market, real estate, and acquire multiple streams of income. What we've been doing so far, we've been having webinars, we've had panel discussions, we've had conferences that sold out. We are trying to make sure that we provide the tools that are necessary for you to move on to the next level. So often, many of us do not know how to handle our finances. So why not dive into it and educate our community? I did invite Atiya Brown, the savvy accountant, on to our recording today. The reason why I invited her is because she is one of the Brown Girls Do Invest. She's our CPA for our realtors. She is the go-to person in case you need to make sure that you know how to handle your finances on the accounting side. As I mentioned before, we do educate you on how to acquire multiple streams of income. But more importantly, we need to make sure that you have all the tools in place for you to be successful. We don't want you to make all of these coins and you don't know what to do.
Yep.
So, excuse me, one of the things that, again, we're going to talk about a lot of things, and one in particular is providing tax strategies for business owners. And I'm going to hand it over to you so you can introduce yourself because I know how fabulous you are. I just want everyone else to know how savvy and fabulous you are. So go ahead.
Well, thank you. So I'm Atiya. I'm the savvy accountant. My name is Atiya Brown. I'm originally from Montreal, Canada, and I moved to the US about 12 years ago. I love taxes. I love numbers. Ever since I was a kid, I was obsessed with numbers. So I have like a healthy obsession with numbers and what they mean. And so accounting actually came to me while I was in university. I was stopped by one of my teachers and she was like, I want you to try out for the tax team. And I was like, tax team? And I tried out and I became on the team of 3 and we ranked 3rd place across all of Canada. So we did like a case competition and we ranked in 3rd place the first year we did it. And I was like, oh, I really like taxes. And so that's where my love of taxes actually started.
That's a
I,
nice passion.
yeah. I actually started the Savvy Accountant in 2017 and I was still working corporate and I went full time completely in September of last year. And so I've been doing it full time. Like you said, creating multiple streams of income. I believe that real estate is one of the great ways that you can actually build generational wealth. And so I've kind of focused my energy on the real estate arena. And because it's so dear to my heart, I wanted to give back to that community because they help build generational wealth for everybody that they touch. So whether it's the agents who are helping others build generational wealth by purchasing properties or the investors who are actually building wealth for their families, and I just wanted to connect with that area. And so that's why I focus on real estate.
Nice, nice. I'm happy to hear that. And I'm sure oh, we have company.
Oh, you're fine.
I'm sorry, my dog. Uh, he hears my voice. He's like, what's going on here? I do. One of the things that caught my attention as I was preparing to speak with you, there were some numbers, and I'm all about the figures. And when I pulled up some numbers in regards to filing taxes and the tax gap I was really astonished. And I'm just going to read to you what
Mhm.
I pulled up. And it said, according to, there was an article on CNN last year. It says there is an estimated 458 billion, that's with the B,
B.
tax gap. And it says taxes that are owed but are not paid. And it also says that individual income taxes account for the biggest slice of the tax gap by $319 billion. And that includes income taxes from small businesses and partnerships. And another 91 billion results from non-payment of employment taxes, such as payroll taxes from self-employed, and 44 billion is a result of corporation taxes owed but not paid. And that led me to think about this. We promote multiple streams of income. People want to know how to file their taxes, when should they file their taxes, what forms should they use. So I want to start out with asking you, what is the difference between a hobby and a business, and when should people start filing? Because people probably feel as though, well, I'm really not earning that much money, so should I really file right now? And if you can follow up with when should they actually file? Because people treat that as though it's just personal taxes when they do it.
Yeah. So you touched on a lot of stuff. And so basically, when you got to think about it, any earned income needs to be reported and taxes filed on it accordingly. And so your hobby versus a business, to answer that, basically a hobby is something that you do out of the passion of your heart, and it's not generally done to create a profit. And so that's one thing that you got to know about hobbies is, like, baking cakes on the side, and it's just something you love to do. So you do it for your church, you do it for your kids' school, or bake sales, and you make money on it. So you can do that as a hobby. And if you make money, you're expected to report that income. The thing with a hobby is that you can incur expenses, and you're able to deduct your expenses as much as the income that you generate. So you're not going to be able to say, oh, I've baked cakes and I only made $100, but it's took me $500 to actually bake all these cakes that I made. If this is just a hobby, you're only going to be able to deduct that $100 of the expenses towards that $100 of income. So you're not going to be able to take that extra loss, because your hobby losses can only be applied against your hobby income. And so that's one thing that people need to be aware of. So hobby versus a business is, you're typically doing a business to generate a profit. However, a lot of the businesses, once they start up, they're not generating profit right away. And so something that they need to consider is that when you're actually doing a business for the purpose of creating a profit, even if you don't make a profit, you're still supposed to report that business. And so that the difference there is that your business can generate losses, and losses, they don't necessarily have to go against income that you make. So if you have a business, and you had startup costs, and it's a legitimate business, you filed a separate entity structure, you can have losses, and it's expected that you're going to have losses in your startup phase, and you're able to deduct these losses even though they're losses and you didn't have income that cover it. There are limits to the startup losses that you're allowed to deduct in the first year of your business, and then the rest of it can be capitalized. However, that's a major difference of what losses you're allowed to actually carry over on your tax return and that are going to carry over, versus if it's a hobby, it's going to be, you can only deduct losses up until what you made for income.
Okay. Well, that's good to know.
Yeah.
So, and it seems like, and I'm pretty sure you're going to touch upon this, and hopefully you do, for people to keep track of their
Mhm.
expenses,
Yep.
paperwork. I'm going to tell you, there have been many people, especially myself. I'm not an accountant, but I am in the financial industry. And when I ask for documentation, when I work with small businesses, they they're like, well, I don't know, or either I have to go and get it, or I'm sure it's here somewhere. Can you
Or
just
I
break
could
it
just
up
check my
right now?
statements.
Yeah. So what what are some ways for some small business owners to actually keep track of their expenses or anything else that they may incur?
So I have like a top 4 list that I tell people that they should be using to get ready for tax season. And one of them deals with knowing your numbers. And so in order for you to know your numbers, you have to keep track of everything. And you need to keep track in order to say, this is what I brought in and this is what I paid for. And one of the best ways to do that nowadays with the technology growing and everything is cloud accounting. So you set yourself up on a cloud accounting system, and that's going to it's going to link to all of your bank accounts, all of the cards that you're using to pay for stuff, your PayPal. It links all of these things, and it's able to keep track of whatever's happening. So whatever's being spent and whatever's coming in, you are able to link it. You're able to download reports. You're able to tag them so that you keep track of everything.
Oh,
Another,
oh,
yep,
go ahead. I'm sorry.
you're fine. One of the downfalls I think that a lot of people have nowadays with this, the influx of technology is the fact that because we have this cloud accounting system, it does not replace you actually having to keep receipts. And so what I say about this is you don't need, the shoebox days are gone. However, you still have to have proof of your deductions. And so with the cloud accounting, you're able to scan your invoices now. So you can scan your receipts and just keep track of what was spent, but you no longer have to keep the actual physical receipt. However, a lot of people think that their bank statements are sufficient. And so the bank statements aren't sufficient in an audit. So they're sufficient for you to, create your financial statements and to create your tax return. And because you just have to comb through them and figure out what your numbers are, but they're not sufficient for, God forbid, if you get audited.
Mm-hmm. So great. That's great advice right there, and especially with the cloud. A lot of people are not aware. There are many business owners starting out that are not familiar with the cloud
Yeah.
itself, and so they actually document if they do everything via spreadsheet. You did touch upon scanning receipts, and I do encourage everyone once they watch this video to start doing research. There's scanners that you can actually, portable scanners that you can actually keep with you,
There are.
and you can scan your receipts, scan your invoices. I mean, it's cool. I have one as well, and it's like the coolest thing ever because I mean, life happens, sometimes. And what if we lose that receipt and we're
Yeah.
like, oh my God, we don't have any documentation, as you said before, when you're audited, the IRS is not going to accept a bank statement. They want to
Yes.
see a receipt. So if you go out and you purchase a scanner, you can immediately scan your receipts or any other important information and upload it to your cloud or wherever software that you're going to use.
Yep.
And by all means, please do not commingle your funds with your personal and your business accounts. You're setting yourself up for failure when people do that.
Yes. That's my number one on my top 4 list is no commingling. You need to get organized from the beginning. And what commingling means, if somebody doesn't know, it's once you start a business and you're running the business and you have a separate entity and you are able to get an EIN number and you have a separate bank account, paying for stuff for the business from your personal account and vice versa, paying personal stuff when you get your nails done from the business account, that is commingling and that's mixing funds. And what that does is tells the rest of the world, including the IRS, that you didn't think that you were separate from your business. So God forbid, if somebody happens to sue you, you get involved in some litigation, you have now opened up your personal self to this liability. And the purpose, one of the main reasons that people tell you when you're starting a business to set up a separate entity is for the protection. You want to protect your personal self and you want to protect the business and you want to keep what's in the business silo, and you want to keep the personal stuff separate. God forbid that you have this business that, it started off as a passion. It was able to grow to a real business. And then you had one customer who's something bad happened, be it your fault or not. Now you don't want your personal residence to come under play, your personal 401k, your husband's issues. Like you don't want all of this stuff to open up because you were commingling. And a lot of people don't realize that the commingling aspect, it might seem small because, I'm the business, so I can spend money, but should something happen down the line, it can be major simply by commingling. And so that's like my number one thing that I tell people, to get into the habit of no commingling from the beginning, because it's easier to build on these habits once you start when you're not as big.
So you mean to tell me I can cannot use my business debit card to get my hair done and my nails done because I'm feeling good about myself and, I represent my company. So
So,
you mean to tell me I cannot do that?
so no, you're not supposed to do that. And and when I work with realtors, it's so funny because I feel like this profession, a lot of realtors, because they're always on point and they tend to think a lot of things are business deductions that necessarily aren't, unfortunately. And so to pass being a business deduction, it has to be reasonable and necessary for you to run your business and for you to, create a profit. And so reasonable and necessary, it varies across the board depending on the type of industry you're in. However, a lot of professions, you have to look presentable. So just the fact that you are showing homes and you have to look presentable to show homes doesn't necessarily mean that your outfit, every outfit that you wear, every time you show a home is going to be deductible, because a lot of professions, you have to look presentable to do the job.
Gotcha. So before we move on to your first strategy, um, can we, can you share with us the deadline or lines to file taxes as a business owner?
Yeah, so there are a few deadlines. And so some of the business returns are actually due in March. So I have like a little thing that I prepared. So I can share that really quickly. And this is just something that I created that shows some of the deadlines. And so can you see my screen?
Oh yes, purple background, highlight
Yeah.
important. Yes, nice.
So we can see here that January passed, but January had some deadlines that you guys should have known. So estimated taxes, that's something that when you're a new business owner, you're not aware of. But when you are a wage earner, a W-2 employee, you typically are sending the government. So the government works on pay as you go. So as you go throughout the year, they expect you to be paying. And so your withholding taxes come out of your paycheck and your employer sends that to the government on your behalf every paycheck. And so that's basically happening as your pay as you go. You earn the income, you pay the taxes on it as you go. That's what the withholdings does. Well, as a business owner, the government expects the same thing, but they expect it on a quarterly basis. And so 4 times throughout the year, you got to file what's called the estimated quarterly taxes. And that's basically you saying what you think you owe for that quarter to the government throughout the year. And so the final payment for the 2019 year was due January 15th. The 1099 W-2s, they were due on January 31st. So if you had contractors that you paid over $600 to during the year, you were expected to prepare a 1099 miscellaneous for them. The next set of due dates deal with the business returns. And so S Corp and partnerships, those business returns are due on March 16th. And April 15th is the tax date that most people are aware of. And so your personal returns are due then. Your estimated quarterly taxes are actually due then as well. And any corporate returns are going to be due on April 15th. And then further, June, you're going to have your estimated quarterly taxes that are going to be due. September, you're going to have your extended. So if you filed an extension for your business returns from March, September 15th is when those are going to be due. And that's also going to be when your third quarter estimated quarterly taxes are. And October 15th is if you filed any extensions from your April 15th deadline, then October 15th is going to be your new deadline for your 2019 taxes. And so that's just a quick little.
Great. I like this chart. Now, I just want to make sure that I love to ask questions that I believe some people are thinking about and they don't want to say it. So when it comes to estimated tax payment, so even though some people may not actually have documentation or something that indicate what their taxes are going to be, basically you are guesstimating to the IRS what you are going to have to pay in taxes. So you may as well start on it now in providing them with that payment.
Yeah. And so it's an estimate, and it's because, anything can happen. You can have seasonalities in your business, and there's different ways to come up with the estimate. So working with a professional is probably going to help you, but it's an estimate. And just like your withholdings are an estimate. So what happens with your withholdings when you're a wage earner in your W-2, you have your withholdings going throughout the year. And then come April 15th, when you get all your documents together and you file your return, you basically are seeing what your tax liability is, comparing it to your withholdings, and seeing if you owe money or if you're getting a refund. And that's typically what the withholdings are. So that's an estimate as well. They want you to be, as close to the real thing as possible, but in both cases, they're estimates, because your withholdings are going to be based on what you expect to make throughout the year. Anything can happen. You can lose your job, you can switch jobs. There's so many things that can happen that are going to impact your income piece. So they're all estimates that get trued up at the end of the year.
One of the things I do want to add, because I noticed that you um, encourage everyone, of course, on the calendar to make sure their 1099s are sent out by January the 31st. I cannot emphasize enough as a small business owner, because my first year, I got caught up in this. I want to emphasize to small business owners the importance of when you are going to work with someone and you are, maybe you guys negotiated a small amount and you're like, well, I don't have to worry about informing the IRS because I'm only going to pay $300. No, anything can happen. It may go up to 600, it may go up to 1,000, 10,000, you never know. My personal advice, and correct me if I'm wrong, my personal advice is get that W-9 filled out.
Right away.
When you are doing your contract as
soon as you sign it.
Yes, do that W-9, because the worst thing you want is to hunt someone down the following year and saying, hey, I need you to complete this form so I can give you
a 1099.
This documentation. They're like, oh no, you should have done that before, I'm busy. Yeah. So make sure all of that is prepared prior to. And if you need assistance with that, what paperwork you need or a checklist, I'm pretty sure the Savvy Accountant can help.
I can definitely help you. And I definitely recommend that as soon as you sign a contract with a new contractor, have them sign the W-9, because at that point, they're going to be, in the process of signing because they signed on you as a new client. And so they're excited. But like you said, what the W-9 does is it gives you all the information you need to complete that 1099. And that 1099 is what you're going to be sending to the IRS saying, I paid this contractor X amount of money. So this is my deduction. So I'm getting a deduction for them. So from my income, now the government is losing out on tax dollars, right? The government wants to know, if we gave you the benefit, who's going to be paying on this income? So you send that 1099 and basically it's a matching principle. Somebody got income of that and I'm taking that deduction. So now if that other person is not claiming that income, the government has now lost out on that delta of the income taxes on that. And so that's why you want to make sure you get that W-9 filled out so that you can claim your deduction the right way and they can actually be reporting their income the right way. And like you said, if you wait till the next year, some people are probably gonna be like, no, I don't have time to do that, because they don't want to report their income maybe. And then you get, you don't want to be the one with the bad end of the stick on that case. So
absolutely. All right. So you're giving us some great jewels here. So can you give us the first strategy that small business owners, a tax strategy for small business owners?
Yeah. So I kind of give tips on how you guys can prepare for tax season, because strategies are like the puzzle that come with tax planning. And it's basically every situation is different. Okay. But what I do like to tell people is, we did touch on it a little bit at the beginning, and we talked about getting organized. So we don't want you commingling, and we can't stress that enough. We don't want you to commingle your funds. And this is going to be beneficial for you because you don't want anybody to come after you and your personal assets come into play. So no commingling. We want you to know your numbers. You cannot rely on somebody telling you, don't worry, I'm going to take care of everything. I try to tell people all the time, if any accountant tells you, don't worry, I handle all your numbers, don't worry about it, you want to run. Because when I prepare your tax return, I sign off on it and you sign off on it. You are just as liable as I am. Granted, my credentials are on the line should something go wrong that I was in fault of or I was negligent on, but there's no excuse. We go through the return, you signing off says that you reviewed what I did. So you need to know your numbers. You need to be able to say, no, this is not the income that I made, or this is the income that I made. These are the deductions. We need to go over this. So you need to know your numbers. And the best way to know your numbers is to get organized. We talked about the cloud accounting system. We talked about making sure you're aware of what is an actual deduction for your business, because you definitely, audits can happen. I tell people not to be afraid of audits, because in the world that we're in, we are submitting things by e-file. So back in the day when I used to prepare returns and I started off preparing them by hand, we would have the paper returns. We have to put everything behind it and everything had to be organized and stapled and not stapled, but together. And it was like everything, all the backup was there. With e-filing, that has been reduced. So we don't submit a lot of the backup. And so for the government, looking at the government from their perspective, they kind of are just getting these things in and taking everybody's word for it. What an audit is doing is they kind of have to dot their I's and cross their T's too. They need to make sure that what people are submitting is actually correct. So an audit isn't something that people need to be afraid of. If you're doing everything the right way and you have your ducks in order and all of your backup, then you really don't need to be afraid of an audit should one happen. So you just need to make sure that you're aware and you know your numbers and that you can prove your numbers and just have the backup to show them. My third tax tip is called the magical rule of 30. So we are talking about taxes a lot. And when you're a wage earner, a W-2, and you're coming from that space to the small business world, you have sometimes the tax bill is a shock, because a lot of the times you weren't aware of the estimated quarterly taxes, so you weren't paying those. And now you made all this income and now you're filing your taxes at the end of the year and you get this tax bill. And a lot of the times you don't have the cash to actually pay this tax bill. And so that creates an anxiety in people. And so what my magical rule of 30 is, every time you get income from your business, I suggest that you save 30% of it in a separate account. And so what this does is it's going to keep the cash available on hand for you to pay your tax liability when it comes due. It's going to give you peace of mind, so you're not going to be afraid of tax time anymore. And it's actually going to benefit you because you can actually put this into an online saving account that has a higher interest rate, and you can earn interest on it while you're waiting to pay your tax bill. And so I tell people to get into the habit of actually saving this money so that you aren't surprised when tax time comes, because it's going to come. It comes every year. And I know a lot of industries are seasonal. And so I work with agents a lot. And they have great, their commissions come in and they're on a high and then they're doing a bunch of stuff. And then sometimes it goes down. But when tax time comes, so many of my agent clients, they don't know where the money went. And they don't know how they're going to pay the tax bill, because a lot of them are supplementing their income. So a lot of them still have W-2 jobs and they're doing this on the side. So this is added income. So their withholdings weren't accounting for this. And so they're going to have a tax liability that they're going to have to pay. And so I try to get them into the habit of actually saving this money so that they can have the cash on hand to pay, so they don't have to worry about the interest and penalties, because the interest and penalties start day one.
You don't want that. Yeah. That's the worst thing, is you don't want a negative relationship with the IRS. And more importantly, you definitely do not want them in your pockets. I really love that third tip, the magic rule of 30. And that's something that a lot of entrepreneurs, business owners, do not think about. They focus so much on the operations of their business. And as you said before, sometimes, starting out, 9 times out of 10, they are supplementing their income until they reach that magic number to put in their 2 weeks notice.
Yes.
And then some people just basically use that 9 to 5 to
fund the business.
Their business. But more importantly, they get the money. They do not have a budget. They do not have an expense report as far as where everything is going. The little receipts that they have, they're just discarding it somewhere, or they're sticking it in their pocketbook. And by the end of the day, they're cleaning out the pocketbook and disposing. And not even considering when they receive payment from that invoice to put the money to the side for tax purposes. They're just thinking, oh my God, I just earned $10,000. I just came up, I'm going to do this and that. I can finally buy my supplies or whatever it is that they
Yeah.
need. But just like and on a personal side, when I speak to people and I say, pay yourself first. In this instance, you need to make sure you pay your savings first to hold
Yep.
yourself accountable for any tax liability. I really like that. And that's for
Yeah.
everyone who's an entrepreneur.
I agree. And I think a lot of people are concerned on the reinvesting in the business and the marketing and how to grow, and all of those things are important, but that IRS, they're not something to joke with. Like, they run things. So if you owe them money, they can shut down a show and there will be nothing left to reinvest in. Like, people don't understand the power that the IRS has. I
Yeah.
mean, yeah,
Yeah.
it's scary, but
The IRS and Sally Mae, I don't like, but that's
yeah.
a whole nother story. So, what's your next tip for everyone?
So I have two more that I think they kind of go hand in hand. So one is working with a trusted professional. And I know that everybody that starts a business, they don't have the funds necessarily to actually hire a CPA or an accountant on their team. However, I like to give the analogy of you're not going to build a home without a solid foundation. And the financial house of your business is, you want that to be solid. So you want to basically make sure you can afford someone to help you on the financial side. And that might be at the beginning paying for a consultation so they can set you up right. They can give you the training for the cloud accounting to make sure that you are able to go and run it on your own the right way, as opposed to trying to DIY it yourself and then having somebody having to come in and fix it. Because fixing issues like money issues, tax issues are a lot more costly than doing it the right way. So while you might think the bill is a little bit higher now, I could assure you, if you get a notice from the IRS, for a professional to take care of that notice is going to cost you a lot more than if you had that professional actually prepare your return. And that's something that I think a lot of people take for granted, especially when it comes to the finances of their business. They think that they don't have to do that right away. And I disagree. And obviously, I'm biased. I'm in this industry, but it's needed from the beginning. Um, my next tip is, don't be afraid to ask questions. So even if you're working with a professional, I don't think that you should ever be afraid to ask questions. You need to have a relationship with your professional that you can speak openly. You can ask them questions. If you're listening to this right now and I said something that triggered something and you're like, wait, my professional never ever mentioned estimated quarterly taxes to me, and you have a high tax liability bill at the end of every year, that's something you should bring up to them. Be like, should I be paying something quarterly so that my liability at the end of the year is not this big? Or why did I get hit with that underpayment penalty? Was that because I didn't pay the estimated quarterly taxes? So don't be afraid to ask the questions that you think might sound silly to the professional. I mean, I don't know how else to say this, but you really shouldn't be afraid to ask a stupid question to somebody who is helping you with your numbers. If they think that your question is stupid, maybe they're not the person that you should be working
True,
with.
which means you cannot have my money.
Yeah.
So, I like all five of those tips, and they are very important. And it does not matter what industry you're in,
Yeah,
especially if you're an entrepreneur starting out.
I agree.
These are some waters that we don't know, how to navigate through. So you're just basically, a lot of people are treating their small business, the tax, as far as filing taxes, like they would with their personal.
Yeah.
And as you see, everyone out there, that's not the way to do. I do have a couple more questions,
Yeah.
for people in the beginning stage who may not be aware. Can you educate us on the difference between fiscal year and calendar year? Because as you know, as a CPA, certified public accountant, for all of those who do not know what the acronym is, she worked hard for that. um, what is the difference? Because again, some people may just say, well, I can file, or the end of my term or calendar or fiscal year is December, July, August, whenever I want it to be, or I have no idea what you're talking about. The calendar say January to December. So what are you talking about? When do I file, or when is the end of my fiscal year? So can you just quickly, briefly explain what is the difference between a fiscal year and a calendar year, and why is that important for a small business owner?
So a calendar year is typically like what you said. It sounds like the calendar. So it's going to run from January to December. And for the most part, most people fall under the calendar year. However, once you file your entity, you can actually elect to have a different year end. And so what that means is that you're going to fall on a different than a calendar. So your 12 months would be different. And so your fiscal year is going to be whatever you decide at the beginning. And there might be certain reasons for that. So I know when I worked at the bank, there were different, we had a different fiscal year. So our year end ended and it wasn't a December 31st. And so all of our quarterly reporting, it fell on our fiscal. And so what that means is your due dates are going to be different than somebody with a calendar year end. And so all the dates that I talked about before, those are going to be for calendar year end filers. And your fiscal year is going to basically, your due dates are going to be based on when your year end ends. And then you're going to go from the 6 months from there. And then your extension is going to go from 6 months from there. So it's going to depend on what you elected at the beginning. And if you typically don't know what I'm discussing, then you probably are just a regular calendar year. A lot of people in certain industries, they elect different fiscal year ends because of when funding falls for grants and certain things of that nature. But so for the most part, most people go January to December, but there might be reasons where your industry would have different year ends.
Exactly. Thank you. Because there are a few small businesses that elect July
Yeah.
as their fiscal year. I have one more question, and I know this is so broad. Well, and I say that because again, when it comes to the IRS, they have so many different forms, it's ridiculous. So my question to you is, and I'm pretty sure it would not behoove any of us for you to just literally list all the forms. But can you explain maybe two or three different types of forms that someone may consider when they are filing their taxes for their small business?
Yeah. So when you're filing, so if you form, you're going to form a business. And if you form a lot of, one of the common ones is an LLC. So it's a limited liability company. And so if you're filing an LLC, and that's what we call a pass-through entity. And so it's going to pass through to your personal tax return. And so when you are filing your personal tax return, here's what I like to tell people, because it gets like they don't get it. So no commingling. We want you to keep your business separate from your personal. And so you have your business financials and you have your personal stuff. But when it comes to the tax return, you're going to take that separate financials and it's going to be input on to your Schedule C in most cases. So Schedule C is going to be for your business, and that's going to be part of your personal return, but it doesn't go where your W-2 information is going to go. So it's not going to be reported on the 1040 on the face where your W-2 wages are going to go. However, it's going to be reported on your total personal tax return. So Schedule C is something that you guys should be aware of as small business owners. Schedule E is another thing that you might be aware of as small business owners, and that deals with real estate. So if you're in the real estate arena, you're most likely going to be reporting on Schedule E because that has to do with real property. And so you have Schedule C, Schedule E. If you have capital gains and you are into like buying and selling, and you have capital gain losses or losses or gains for the year, you're going to be reporting that on your Schedule D, and that's going to be for any transactions that deal with capital assets. So those are three of the main ones I think that people need to be aware of. You're going to have your small business could be reported on Schedule C or Schedule E, depending on what industry and what type of business you're running. Your Schedule D is going to deal with your capital gains and losses and any sale of assets. That's another common one. I mean, Schedule A is going to have your deductions and your itemized items, but that's typically the case whether you're a small business owner or not. So if you were just a wage earner, you would most likely have your Schedule A that's going to be part of your personal tax return.
Okay, great. Thank you. So everyone, don't wait until the last minute to file your taxes.
No, do not.
They have until when?
April 15th for
Okay.
your personal returns. If you guys have an S Corp or you guys have a partnership, you guys are actually in March. So you guys got to get that done. So real quick with the S Corp and the partnerships, these are what we kind of call informational returns. So they have to be filed to the IRS. You have to file them. It's a whole separate return, but you don't generate a liability, like a tax liability on it. So you're not going to have to pay any income taxes on it. It's more of an informational return, and they're both going to generate a form that you input on your personal return. And so so you file, and that's why the deadline is earlier. So you file those there, you're going to get the form, and then that form is what you actually put on your personal return when you're preparing your 1040.
Nice. Can you give them your contact information so if they have any questions, they are able to reach
Yes.
out to you?
So if you guys want to reach out to me, I'm the Savvy Accountant across social media. So you can reach out on Facebook, Instagram, or Twitter as the Savvy Accountant, or you guys can shoot me an email at info, I-N-F-O, at the Savvy Accountant with 2 V's in savvy.co. So info at the savvyaccountant.co.
Great. Thank you. And of course, as you know, we are Brown Girls Do Invest, and that is us across the board. Also, and you can reach us at browngirlsdoinvest.org, where we list all of our events that are up and coming. The next big one that we are going to have, we are going to release a course March 20th of this year in his intro to investing. So it's going to break down everything. And it is a self-paced course. Once you are into that course, you're able to go in and out, take notes, take quizzes, and familiarize yourself with how to invest. But I think that this right here was phenomenal. I appreciate
you.
You're welcome for sharing everything. And I'm pretty sure we're going to have you on again because you are part of our community.
Thank you. I'm so happy to be here, and I look forward to that course coming out.
Thank you. Thank you. Well, good night, everybody. And until we meet next time.
Good night.
I cannot forget my quote. I cannot forget my quote. African proverb. If you want to go fast, go alone. If you want to go far, go together. Good night.
Good night.